it. So what's going on with the markets today? Or outlook, let's put it that way. How's it looking?
You should do the disclaimer before it.
Okay, let's do that. I want to just get a brief overview, then we'll hit them with a disclaimer. And I got to give them a little info of what we're going to be talking about.
Market's moving.
It's moving. The market's always moving.
Yeah.
All right, we'll dive into the deep aspect after. I want to do. We were just talking about private meetings. We were talking about other stuff, but fine. Disclaimer first, then we'll get into the juicy stuff. How's that?
He's bitter now.
Yeah. Now I'm gonna be attacking you. See you guys in a bit. Okay, Cannonball, what's going on?
All kinds of stuff, man. Did you hear?
There's definitely a lot of stuff happening today. That's for sure.
Indeed.
On Friday, I wish I had waited to drink my bourbon today instead of last week.
I know. Seriously, it would be a good day for it.
All right.
Well, we got lots of stuff happening, right? We got inflation stuff happening. It's getting uglier out there.
We have private meetings on Valentine's Day.
Yeah.
I don't know. What's up with this?
Will's going to be attending that personally, so he'll be able to give us some detail from it.
My private meeting on Valentine's Day. Yeah. I'm sure he'll know all about
it. Poor Paul's just sitting there like, I don't know why.
Hey, this is market talk. Come on.
Hey, Will took it to the gutter. Come on.
Okay.
So
raise it up just a little bit of professionalism.
Let's start with so we're talking about the rates, right? You want to get into that?
Yeah. So last week, do you want to start, Paul, or should I start?
Well, I think the biggest theme or the topic is yesterday's CPI that came out and how markets reacted to it. So I found that absolutely fascinating. It's really not so much about inflation anymore, but the expectation of what the Fed is going to do. That's all the market cares about. It doesn't matter. CPI comes out higher than expected, then the Fed's more hawkish. It doesn't matter that inflation was a little higher. It's just the Fed's reaction. That's what the market, all the markets, every asset class is reacting to now. So if you look at the knee-jerk reaction across asset classes, I find this fascinating. What was the only asset class that actually rallied off of the 8:30 a.m. news in the U.S. Eastern Time CPI? The only asset class that rallied, U.S. dollar. Now, if inflation is higher than expected, all things being equal, put the Fed aside, you would expect the U.S. dollar, just on that news alone, would go down. But it's all about the perceived future rate hikes, how much the Fed is going to do. The U.S. dollar has been very strong over this time, over this whole period of inflation fears. Why? Because the expectation, it's all about expectation for rate hikes. It's what it's all about. So the dollar rallied and every other asset class came down. Bitcoin fell, stocks fell. These were the knee-jerk reactions within the first few minutes. Stocks fell, Bitcoin fell, even oil fell, even gold fell. Why? Because they're all priced in USD. I mean, you could argue that Bitcoin's priced in every fiat currency. True, but it's, the reserve currency is the US dollar. So ultimately it will be priced and benchmarked against the US dollar. So really every asset class priced in USD fell and USD went up.
Didn't.
And that was the knee-jerk reaction across the board. So, everything's reacting to Fed rate hike expectations. That's the name of the game. It's going to be for the next few months. After that, after the knee-jerk reaction, so, markets sort of settled down. Obviously rates went up, dollar strengthened off of that. And the one asset class that did sort of reverse back and sort of rally were cryptos, at least during the course of the day, more so than other asset classes. But I think that's, if you were to bifurcate all asset classes one way or another, are they being priced in USD? Chances are they probably are. And what's the dollar reaction? And if the dollar is rallying, those asset classes are going down. So it's as simple as that.
Mm-hmm. I remember trading, I think it was yesterday morning pre-market,
yep.
and seeing like the moment, like it wasn't even live on their website yet. It was I guess it came up in some pre-feed of news before even they posted to their site. It created this immediate V shape where there was, like you were saying, this huge fear response. Everything dumped, and then everything came back up. Then there was I think people were processing what happened, and then it just oh yeah, this should be a short, and then everything started trailing off.
Yeah, and it's amazing. Every asset class priced in USD, including Bitcoin, just did that U shape. As you say, well, just everything was incredibly correlated for at least 40 minutes or so.
Yeah,
30 minutes.
I remember people were asking about this in our community chat actually, because it creates this form of candlestick that I call the rec longs, rec shorts candlestick, where basically everybody who has a margin position gets liquidated.
Yep, they're done.
Because it goes beyond both stops.
Yep. So look, I mean, all asset classes, I think, have this Fed rate hike or expectations of Fed rate hikes as a headwind, right? Anything that's being priced in reserve USD, and just again based on the way Bitcoin reacted to that, you have to say yes. Ultimately, it is being priced in reserve USD. That's going to be a headwind to all asset classes. Maybe even oil as well. We shall see.
Speaking of oil, one thing I noticed was very interesting in the CPI data, and I'll bring it up here. If I can find it. No, that one. If you take a look,
share the screen.
Yeah.
just gotta confirm that.
Fascinating watching Will look at his screen, but yeah, let's see the screen too.
I got so many tabs, unfathomable amount of tabs. You have no idea. If you take a look at digging into this data, you can see the lion's share is around energy commodities, which I find in itself very interesting. I'm curious to get everybody's perspectives on this as to kind of the driver of inflation potentially, or how it relates to the total inflation number that we're seeing.
Well, I mean, when energy prices go up as much as they have, it factors into everything. It raises everyone's cost.
Yep.
Right. So whether it's food transportation or human transportation, or it factors into everything.
Mm-hmm. And this is predominantly oil and gas.
Yeah.
Mm-hmm. And it's funny because I recall, and this is why I have this, I kind of overlaid oil futures, because it reminded me of during the COVID crash, how we had this oil futures that literally went negative. Right. You guys remember this?
Yep.
Mm-hmm.
And now, funny enough, it's
back on the cycle,
responsible for most of the inflation that we see. I just find that kind of interesting.
I would have expected that to be more real estate and labor in addition to energy, but it's almost all energy. You're right. And everything else kind of tracks normally. I mean, normal to the last couple of years. There's kind of two explanations in my mind, and maybe you guys can come up with, some that I didn't think of. But explanation number one is just there's disinvestment in, production of new sources, right? People are looking at windmills going up and solar going up and all that sort of stuff and going, well, I may not the horizon for return is small, so I'm going to start to disinvest a little bit. That's one possibility. The other is that the uptick in the economy kind of created a little bit of a temporary shortage, right? We're just not, we were producing to what we thought we would need as an economy, right? Global economy. And we simply didn't anticipate a rebound this quick.
I'm definitely not an expert in the oil industry, and
Me
I'm
neither.
sure that a lot of it's probably supply and demand, but we also know that oil supply is controlled by OPEC.
Yeah.
So I'm wondering if they, maybe they're artificially constricting supply to make money off it, right? Which then triggers and runaway inflation.
Not to be conspiracy theorists or anything like that, but that's what they do, right? Is that they control demand to control cost, or rather control supply to control cost. So yeah, it's they're.
As we're sitting here, it just occurred to me also, and I can't believe I didn't think about this earlier, but it may be that other oil producers are starting to ask for more simply because they anticipate Russian stocks not feeding into Europe anymore. With all the political turmoil there.
It's true.
I can't believe I just thought of that, but
that's a big thought for you. I hope you didn't hurt yourself. You okay?
Yeah, I'm done for the day. It's about as much as I can pull off.
Go take a nap, put your head down, let it rest. Yeah. You don't want it to bleed or anything.
Yeah, my head hurts.
Yeah, no, I mean, to your points, Eric and Will, I mean, oil production, from what I can tell, just looking at this really for the first time in a while, it is not up to pre-COVID levels in the U.S. production. It's since COVID, it's at its highest levels since the start of COVID, which March of 2020. But since beginning of 2020 and before, it hasn't reached those peak levels of sort of around 2020, 2019. So I'm sure it's both a supply and a demand issue.
Mm-hmm.
It's an octopus. Multiple contributing factors are feeding into it.
So the other two categories that are not quite as high as energy, but if you look at the data, and I can here, I'll share this with you, Will, if you want to pop this up.
Sure.
The other two are meats, which anybody who's gone to the grocery store lately understands that. The other one that I thought was really interesting, a big surge in used cars. Don't know what that's about.
Yeah, I saw that too.
Market, it's insane.
Well, so the used car thing is just because new car production was so far down, right? Like lack of materials, right? All of that kind of stuff.
That's what they keep saying.
The chip shortage was huge, but it's also, lack of materials because everything gets backed up. And so then the used car market took off, and the used car market took off and prices just went bonkers. And there you go.
And of course, those cars have to be transported everywhere using oil.
Yeah.
So what you're saying is no Ford F-150 Lightning for me anytime soon. Got it.
They've already pushed that out to 2024, I think.
Did they really? That sucks.
I think so. And Tesla Cybertruck's not even coming in for probably till 2025.
2030. Yeah.
Actually, I just pulled up the crude oil weekly chart, and it is interesting to see the few dips that have occurred last year, and then the current graph, I guess, chart for what it's looking like now. Interesting.
You can see that oil, I have it on orange in this chart here, and the S&P is in white. I know because it may be hard to read. You see that there was this dip in oil futures around November. My guess is that this timed around when Omicron started coming out, right? So then people were pricing in this expectation that everything was going to be locked down again, which then would just put a complete halt to the transportation industry all over again. Right? But now that I think everything's starting to open up because we're seeing the tail end of Omicron, right? People are expecting to go back to normal, and people will be driving around and all this stuff, right?
Yeah, the return to normalcy. I think people are just fed up with it at this point. Honestly, they're just tired.
Yeah. I don't think complete shutdowns are going to happen ever again. I don't think anybody's going to have it.
Well,
politically, it's not feasible.
in the States, that you guys have been following it, in the States, multiple states, even blue-leaning states with blue governors, Democratic governors for those that aren't, American-centric here, they're already opening up, right? They're just saying it's time. We're going to lose all mask mandates, and they're just pushing. Like, to your point, Jason, I think everybody's tired. They feel it's safe enough, right? We've gotten through enough of it, and let's just open back up again, which is, of course, going to drive demand and back everything up.
So when the scientists and doctors started to use the word endemic, that's when everybody just kind of threw up their arms and said, all right, forget it.
What I find interesting, just to, I guess, add to the whole used car market, secondary car market. I'm a car guy, but whenever, I have been looking into a new car, and the salespeople, they honestly feel like they have like this upper hand now. They keep just saying like chip shortage, right? Like there's no room for negotiating and all this other weird stuff. But push comes to shove, it's not like these chips are just going to appear out of nowhere. There has to be further production. What has to change to then get us to like this new phase, I guess? So what is this return to normalcy? How does that actually like start? Is that even an odd question to ask? Are things that far backed up? Like
I don't know. Like I haven't really been following the supply chain issues that we've been having. Like I know there were some. I don't know what state that they're in now. Maybe somebody else can speak more to that than I can.
Even hearing the stuff that's happening, not to get too political, but like the stuff that's happening like in Canada with like these truckers and stuff. Take politics out, and then if you just actually focus on just like the distribution system, right? Like if that's not moving or if that's not working, that's like one of the worst things you could have for any financial market. No, that just stops everything at that point.
I have a few acquaintances that are in the transportation industry, and they consistently told me the Port of Long Beach in the United States is massively backed up to the tune of months.
Yeah.
And so you're right, Jason, there's two aspects to it. There's production and there's distribution. And we're not just seeing problems in one, we're seeing problems in both. And the latter maybe in fact the bigger problem.
Yeah.
Those same ports are used to import oil too, right?
So
that's right.
It's getting like depressing now.
Well, no, the answer is.
Does this mean that now there is like, now it's time for like the growth? Does this make sense? It's now time for like the growth phase, right? Come up with the solution, start growing up, or things just kind of get mixed up and then more problems occur?
Well, look, let's have the big boy conversation here that nobody wants to have, right? In the shipping industry, right? So if you're a shipper and you see strikes in Canada and you see backed up ports and you see people leaving because of COVID or whatever, here's the big boy conversation. Wages for those people are going to have to go up. What do you mean? You mean I make less money? Yes, you've got to pay more. Simple, right? It's supply and demand. Welcome to capitalism, right? It works both ways. The other side of it is that on the production side, again, welcome to capitalism, right? So as you're starting to see, for example, with chips, right? Taiwan Semiconductor, they're starting to ramp up as well. It takes time. It's not like a light switch for anybody who knows about sort of semiconductor. Like it takes months to like start to ramp up, if you will. So if you're having trouble getting a car or a PlayStation 5 or whatever the case may be, it's because of that. And for those of you who don't know TSMC, right, they actually produce chips for just about everybody, ARM and AMD and all that, right? Intel, I think, is the only one that has its own. So it's just going to take time to ramp up on that side. But labor markets have to adjust in logistics, and the fabs have to just start catching up, right? And unless the latter starts to shake out, sure, the production can start to ramp up, but if it's just going to sit on the port anyway, then
sure, yeah,
we're still in the same boat. Yeah.
So it's kind of an interesting question, in terms of what the Fed has to do. So the Fed, by raising rates, really only can control the demand side of it, right? The supply chain is the supply side of it. Right. Assuming, Eric, that the supply chains do over the course of the next several months, however long this takes, begin to open up. I've heard experts say anywhere over the next 3 to 6 months, we should be seeing, a lot of these bottlenecks begin to open up, say sort of over the summer. That said, the Fed should have had several rate hikes under their belt come the summer. They have to be keeping an eye on the opening up of supply chains. And this is a very delicate balance. The Fed's never been in a position where inflation, it's hard to break it down, and I haven't seen any good economists break it down, how much of that inflation uptick has been supply driven versus demand driven. But it sort of seems that it has been almost entirely or mostly, certainly this is what everyone sort of seems to say, supply driven, right? But they have to watch the supply chains opening up very closely, because prices could drop very quicker than maybe they anticipated, if supply chains do open up and they raise rates a little too hawkishly. So they really have to have their ear on the ground with these supply chains and understand sort of the ramifications of controlling the demand side while just ignoring the supply side. They've got to watch the supply side very closely. And I'm sure that's what they're having special meetings about and talking about all the time.
I'm 100% sure that's most of what they're talking about right now is, what do we look for where, prices start to plummet the other way? Then, did we overcorrect? Do we pull back a little bit on rates? That's going to be the trick. The trick is going to be landing the plane smoothly.
Yeah.
Right?
Yeah.
Right. That's the trick. So you just raise it a little, watch, and hopefully you can start to see leading indicators start to drop off, and then you just back off and just leave it.
Right. And
right?
But the Fed has never had to deal with an inflation uptick like this purely driven by a supply chain issue. So this is the tricky part for the Fed. It's a very tricky part.
It's going to be interesting. So what does all this mean for crypto is the other question.
Yeah.
Well, as I said before, I think the headwinds are still there, like it or not. I mean, yeah, right now, despite yesterday's sort of knee-jerk reaction across all asset prices, it does seem like crypto is trading like its unique asset class. Certainly, the decoupling after that. After our last conversation last week, right? Sort of still exists, but I still think that there is this Fed headwind in the face of all asset prices, at least for the next several months.
So I'm going to ask the stupid question of you, Paul. Then, so Fed injects liquidity in the market, lots of liquidity. People go on a buying spree for equities and real estate and even crypto. So the Fed was just pumping. Now that they've stopped pumping, do we see a correlation when the Fed pumps and a decorrelation when the Fed stops?
No, it's been the other way around, right? When the Fed,
the opposite. Okay.
Yeah. When the fear of a hawkish Fed has made everything more correlated. Right. I think when there was easy money, you get the decoupling to some degree.
Interesting. Okay.
More of a, even though both Bitcoin and cryptos and equities were all rallying, the correlation last year was a lot lower than over the past several weeks. Right. So, typically correlations, when markets get hit, correlations tend to go up. And that's across asset classes and intra asset class, right? So when you saw Bitcoin go down, correlations across cryptos went up. So
yep, definitely. It's really clear in crypto when it happens. It's really,
and that's true of all intra asset classes, right? It's true within credit spreads. It's true within equities. It's true within commodities. I mean,
I want to show you guys an interesting chart because I put an idea in my head when we've been talking about the strength of the dollar and how it's inversely related to stocks and the S&P and this stuff, that what would happen if we actually charted the S&P divided by DXY, which would basically kind of divide out the strength of the dollar in the stock market. So this is what it looks like. Just thought that was an interesting chart to see, like historically. You can see like that this is really just looks like it's just a rounded top, and this is going to come right back down. Honestly, yeah. I just thought it was interesting to take a look at.
But I think you see that anyway in equities, not divided by.
It's true. Yeah, we see here. I think it's just a little like it's even more pronounced here.
Pronounced when you divide it by dollar. Yeah.
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 But we were already, for weeks now, we've been talking about this expectation that this was a bearish cycle for this year. And I drew this little thing that, we expected this to have a relief rally, remember? When everybody was scared here in January. Like, yeah, it's going to come back up and have a relief rally, and it's just going to go right back down. And we're seeing that now. We're seeing that starting to happen. In fact, the S&P here is really close to breaking under this support price to the downside, which would then immediately spike the VIX and all this other stuff, right? And then cause, as Paul was saying, a high correlation among everything.
Great insights. I feel like I've learned something.
Yeah, right.
I think it's all just also leading towards summer. And then if that's when all this, just going back to the other discussion about things being bottleneck and then opening up, perhaps now it's just everybody, again, just waiting to see kind of what happens and then just being hesitant. But then if everything goes smoothly, then that's just the time for everything to get back into business, right? Back into business mode.
I don't know. Like, I feel like Paul could speak to this better than me, but I think, I don't know. I mean, it's going to take a while to fix the current situation. And I think people are starting to expect there to be quite a few rate hikes this year.
Yeah. And the next meeting is in March, I think, right? So clear. We got to wait for that.
I don't know. Like, do they normally do anything with these private meetings? I know they've had some in the past. I don't know if they only do these hikes during the standard ones or not.
During FOMC meetings? No, they can come in and surprise the market in between FOMC meetings. Okay. That's been done before. I don't know that it's going to happen before the first expected rate hike FOMC meeting. I think that would definitely shock the markets for sure, big time.
For that to happen, it would have to be in response to some pretty major concerns.
I think so. And I think, doing that would put much more fear into the marketplace than the Fed wants to, right? Yeah. The Fed just wants to sort of ease off the gas pedal in sort of a moderated way. But for them to do that after, just 6 months ago, not even talking about taking the gas, the foot off the gas pedal, would be quite an about turn. So I don't think they're going to do that. I'd be really the whole marketplace would be very surprised if that were to happen.
Yeah.
And they're seeing the same data we are, right? So with energy prices, I mean, can you bump the rates up and then drop energy demand? Well, seems to me like a lot of energy demand, is baseline. If that makes any sense? Not all of it. I mean, they will impact demand to some extent, but it seems like a weak case to surprise the market. I don't know.
Let's flip over to Bitcoin. So you haven't looked at that one yet.
Yep.
I just love how everybody just every single day somebody has a different opinion on Bitcoin. So it's always great. I love it.
Yeah.
Social media is just it's either going to 100 or it's going to 20.
So what's your pulse on what social media is saying lately, Jason?
Now I think it's still positive. I haven't seen anything like crazy now.
Because if you're a pundit, a commentator, media type, right? Calling BTC at 100 or calling it at 20, right? If it happens, then you look like a genius, right? So, and if it doesn't happen, well, then you just kind of sweep that under the rug and pretend it never happened, right? Or delete the tweet or whatever. They're just playing that game.
I've seen that plenty of times where people make calls and then you see them delete those tweets. I've seen that plenty of times.
Mm-hmm. Yeah, it's crypto's a kind of an interesting place right now, right? You've got sort of technical support on the one side, having gone through this breakout, as you can see on Will's chart there. So it sort of seems to be sort of stabilized now after the breakout from the trend line since last November. But you've got the headwind of the Fed, so. You've got both effects at this point, and it could be sort of a sideways but volatile kind of market for the next couple of months.
Yeah, that's actually kind of what I'm seeing. A lot of the charts or the people that I've been following, their TA, it's just kind of showing it sideways into like April about, and then starts to go up, but that's kind of just what I'm seeing. Indecisiveness.
Yeah, I mean, well, I think that this clearly is now a very large support, very large one, because you've seen it here, you've seen it back here, you've seen it over here, right? So even if we come back down on bearish news, I don't expect it to come back into this territory in like the mid 30s anymore, in my opinion. It would take a lot for that to happen.
And then ironically, usually when BTC is doing these sideways moments, that's when altcoins typically have their time to shine. Mm-hmm. So,
right.
That's another interesting dynamic.
Yep, that's true. This is when you have a sideways volatile market, it's actually a great time to be in a system like Fate, because we take advantage of that sideways volatility and allows us markets become predictable in regards to their trend.
So the last show we did, we were talking about Grayscale, right? The approval, but they did get that denial. But from what I've read, they're basically giving that opinion, or they're collecting information from like the public, right? So the communities. So Grayscale they have to respond back later this month. So does that typically mean that if they're responding back, that we could then also have an answer of that in February? Or does that mean now that they have to set like another date for another discussion for approval or extension denial? Does that make sense? Can we still get something for February, or?
It's hard to say, like how. I guess I could see it a few different ways personally. It seems to me that the Fed has latched onto this idea that they want to create their own government-controlled stablecoin, right? And I think they're going to keep punting these spot ETFs until they get that through. Because when you look at the denial letters, they usually cite, tether-related manipulations. And I don't know what the particular reason for denial this time was. I mean, that would be an interesting thing to find out. I'm kind of curious.
So when the SEC or people say that they're giving it to public opinion, I guess, what does that actually mean? Because I mean, they could just go and look now, and everybody's giving their opinion before they're even saying that they have to get the public's opinion. So
did Grayscale say that, or the SEC say that?
No, it's the SEC.
Interesting. That's
trying to find the exact info, because there's a date I think it was like February 20 something, where they're going to continue the discussion.
Let's see.
I think the other thing that is just going to be a headwind, just generally in crypto space for a little bit of time as well, is just this regulatory uncertainty, right? I mean, it's pervaded for it's been pervasive for so long, but you know, there's no clear rules or regs around about what is a security and what is not, and that has to come to an end at some point. You know, the SEC can't keep talking or theorizing about what particular crypto asset is a security and what is not, you know, there has to be either a new regulatory body or a whole new process or a new something, but there's just not enough clarity at this point, and I think that's going to weigh, unfortunately, a little bit on you know, huge amounts of assets being poured into crypto until there is more certainty. So I think that's part of it. I think the SEC is punting on these ETF decisions, really, because there has to be uniformity. There has to be uniformity, right? You know, the CFTC was allowed to create these futures-based crypto Bitcoin ETFs, but you know, the issue is with spot. And the way the SEC decides what is considered a security and what is not, and why. So,
but that's the part that gets me. So I'm just pulling up, just based again on articles. I'm sure we could find like the official statement, but it just says that the SEC, they're basically asking for public comments on the proposal. Mm-hmm. But it's like there's always been public comments. So what does that actually entail when they say like public comments?
Yeah, I don't know what they're looking to gain for that.
Yeah, I don't get it either.
It's a popularity contest. I mean, I don't know what
this doesn't make sense. Like that.
Probably true.
We denied it because we want to ask the public for their opinion on it. I mean, all right, we've had our opinion for quite some time.
Very strange.
Seems like a weird attempt to try to cover their assets, right? My finance professor would say.
You couldn't resist. It's okay.
Great professor. His humor was terrible.
I'm trying to get the actual date because I remember seeing somewhere that Grayscale has a proper that they can reply by a certain date or something. I'm trying to figure out where that was. But it's towards the end of February. They have a certain amount of days to respond back to that.
Yeah, it's weird. I don't know.
Yeah, so giving interested parties 21 days to respond in writing. So the SEC has invited the public to comment on these issues, then giving interested parties 21 days to respond in writing. Mm-hmm. Whatever that might entail.
Anyway.
But 21 days from the 4th or the 6th being denied, that's still in February. Maybe this whole run up, it could still keep continuing it, and then maybe they have some answers and it keeps going.
Yeah, well, sometimes when you don't know what to do, the best thing to do is just to stay out.
Yeah,
right. There is such a thing as over trading when you're trying too hard.
That's true. That, but then also not going full FOMO into something and then not having the right research, right? And then getting destroyed. That's a whole other component. Sometimes
a whole other level of pain.
All right, I'm just checking the time. So we are over. I do want to thank you guys again for joining us. So for the market talk, let's get into further discussion as to when we would like to reschedule or schedule these, right? Talk to the community.
So if we can real quick, let's talk about that briefly. So what we're going to do is next week on Friday, we're not going to have the market talk on Friday. we're going to push it to the very beginning of next week. And Stefan and Jason, I'll leave it up to you guys as to whether it's Monday at what time or Tuesday at what time, right? But what we're going to do is we're not going to make a change this week, obviously, but next week we're implementing the change. So we're moving the Flourishing live show up an hour, and then the Market Talk segment will then take place the following week. So stay tuned for that. We'll provide all the updates on Twitter. So.
Very true. All right, guys. Thank you. Have a good rest of your Friday. Enjoy the weekend. Follow your schedule and continue with the rest of the stuff.
Have a great time.
If you saw the previous show, let's see if there's more drama with this stuff because I keep getting
drama.
We'll keep watching.
Totally.
All right. Thanks, guys. Thank you.
Thanks, you guys.
Cheers, everyone.
See ya.